Hello everyone, welcome back to my channel. If you are new here, my name is Carla, and in today's video we are going to clear up a common question that I get a lot, which is the difference between your credit card statement and the due date, which it brings a lot of confusion for a lot of people. Plus, we will be diving into what a statement actually is and whether you are a credit card newbie or you need a refresher. This video is for you, so let's get started. So what exactly is a credit card statement? Think of it if it's your monthly financial report card from your credit card company, which basically it's a list of all of transaction you have made during the billing cycle, total balances, a fee charge, so all of the fees that you might get into this time frame, and of course the total amount of whatever you owe in that time frame, which bring us to the statement date and the due date, which I will be explaining shortly. So your statement date basically is the date that your credit card bill is generated each month. So let's say that every first of each month that is going to be generated. So let's just have that in mind as an example. As soon as this date hits, your credit card company is going to snap a picture of your account, listing all of the transaction up to that date. This is important because it's marked the end of your billing cycle, which is what we are talking about right here. So now, the due date is usually be about or between 21 and 25 days after your statement date close. So let's say that, as continue with example, let's say that the statement date was on the first of each month or is on the first of each month. So your due date is when you have to pay your card is going to be on the 25th of each month. And this is the deadline by which you must pay at least the minimum payment due to avoid late fees and potentially hit your credit score. So why does this matter? Because understanding these dates can help you manage your finance better. For example, knowing your statement date can help you maximize your interest-free period on purchase. If you know your billing cycle, when your billing cycle ends, you can time larger purchases to maximize the grace period. So you can play around with the due dates statement dates and due date. That way you can you know when you can afford a purchase in a specific time frame. So that's how it usually works. So if you are finding this video helpful so far, please hit that like button, subscribe to my channel, and let me know in the comments below your thoughts. And if you have any questions about this subject, that way we can engage over there. I would love to help you or answer your questions. And don't forget, join to my free VIP group. That's the community that I am creating. Is hosted in a school platform, and basically we are going deeper in this type of subject, in more subjects related to finance, budgeting, credits, and much more. So I hope to see you there. Coming back to the subject, another great tips to understand how this affects your credit utilization, how much of your credit limit you are using, is calculated based on the balance reported on your statement date. If you pay part of all of your balance before this date, you can lower your utilization rate, which is a great for your credit score. But remember, just because you have until the due date, which is 25 days after the statement close or the statement date, doesn't mean that you should wait until the last minute to make your payment. There is many factors that can occur here. If you just wait until the due date, there is a time frame that the payment is processed that can hurt your credit. So just be aware of that. Just be clear with the bank to see how they handle that. Also, yes, so don't wait till the last minute. Early payments not only keep you in a good standing, but also can help you with budgeting and more effectively throughout the month. So just keep these tips in mind because they are very helpful. So a statement date usually are the top of your bank statement. So basically, I think is at the top right usually. So or left. Just take a look at it. So keep in mind that by the due date, you have to pay the minimum balance in order to not get into trouble with late payments fee or late payment or the late payments being reported to the credit bureaus, and it's going to impact your credit negatively. So it's going to take you some point downs. And also be aware that usually late payments stay on your credit report for 7 years. So we don't want that. No, no, no. We don't want that. So basically, these actions keep your credit card in good standing, but it doesn't mean that avoid interest. So just keep this in mind too. I mean, I'm trying to give you all of the details here. That way you can understand better. So the fact that you are paying the, let's say that you are paying the minimum by the due date, is going to keep you in a good standing. Basically, it won't report me or late payment or on, I mean, it won't generate late payment fees, and it won't be reported as a late payment to the bureaus either. However, it's gonna cost you some interest because you are paying the minimum balance, not the total balance. So in the remaining balance, let's say that you owe $100 and you just pay 25, they're gonna charge you with interest fee for the remaining balance, which is $75. Just keep that in mind. So the interest will apply to whatever balance it left, which in this specific example is going to be the $75 and of the statement listed balance. However, I recommend that you pay your balance in full every single month. So by the next upcoming due date, it's better that you pay it in full. That way you don't have to deal with it or have any issues. And to keep your utilization low, you want to have whatever balance um, your car has on the statement date to be between 1 to 4% of your limit. That's the ideal. So what I'm gonna say here is, let's say that your card limit is 1,000. So just try to, I mean, you have to be aware you can use the full amount as much as you want. You just have to be paying back. I mean, you can use that 1,000, pay the car, and then you can reuse it again in between the building cycle. What you have to be aware is that by the statement date, that is the date that is supposed to, the company is going to snap that picture of your account. So you just have to be aware that you just owe between 1 and 4% of your limit will be great. That's the ideal. If for some reason you cannot put that much money down and the statement date uh, comes, so aim to have a balance of at least or higher at 10%. So this is okay. This is still manageable. This is a good deal because I mean the issue is like somewhere. I mean everybody is saying that 30% utilization is balance is okay. However, that's not ideal because you are on the edge, which could look bad to the banks when they are analyzing your reports or your credit, because I mean you are right there. I mean you are one step away to be in the bad spot. So basically that's why I recommend to be at 10%, and if you can aim for below that is even better. So it's also crucial to set reminders to these dates. I mean if you know the difference, is a good deal, because I mean if you set a reminder, okay, today is my statement date, so that's when this picture is going to be taken or the statement closed. So now you have to be aware that on if that's going to be done on the first, whatever you spend on the second is going to go to the next statement date from for the next month. So then you have even much more time over there to deal with the next um, with those expenses or purchase after the first. But meanwhile, you are dealing with a situation that what happened by the before and by the first. So that's what we need to be aware of. So just set up reminders for these dates, just when the statement date is and when is the due date. There is many apps in banking interfaces allowed to set up notifications, like you can just get an email or a text when this happen. So just turn it on, those notifications, that way you are aware, and just keep that in mind so you never miss a due date and or you never miss a minimum payment or the payment of your car. That way you keep your account in good standing, and also you are good to go with the credit bureaus too. This simple step can save you a lot of money in late fees and hassle in the long run. So let's recap here. Your statement date is when your credit card summary is generated. So like remember that snap picture that the company is gonna take on that date on your account. That's basically is the statement date. In that, whatever balance you have at the moment, that's the balance that you have to pay. And I recommend in full by the due date, which is supposed to be about 21 and 25 days, depend of the company. Managing these dates smartly can lead you to a better credit health, and also more effective financial management. That way you can avoid a lot of headaches. And that wraps up our dive into the credit card statement and due dates. Thank you for sticking with me all of this time. Remember, effective credit cards use is all about understanding the fine prints in managing your finance properly. Don't forget to like, subscribe, and join my free VIP group for more tips. Keep watching, keep learning, keep pushing your financial wisdom further, and see you in the next video. Bye.